Yep. So I'm representing Fleek for today for the webinar. So as you probably know, Fleek is a one-stop shop solution for corporations, from incorporating the company to company secretary, bookkeeping, accounting, audit, down to tax. Yeah, so we provide these service so that there's no worry for you setting up company in Hong Kong, Singapore, UK, and Australia. So here is what our presence looks like. So we have clients from all of these different countries and many more incoming, and our team span more than 10 different countries with more than 500 speakers and firms. Yeah. So of course, let's get into the meat of the webinar for today. So who for profit tax return? So who will receive the profit tax return? So of course, if you have a company in Hong Kong, then you should definitely require to file the profit tax return. And typically, the IRD, the Inland Revenue Department, will send a profit tax return PTR to the company after its incorporation or a certain date within a year. So you can see on the slide, newly registered business. So typically, the IRD will send out their profit tax return 18 months after the date of incorporation. So if you're in that bracket, then please do expect the IRD to send out the profit tax return around that date. For continuing business, typically they'll send out on the first day of April. So, you know, this month is April. So if you already have submitted profit tax return before, then please do expect to receive the profit tax return in April. Okay. But of course, there are some circumstances where the IRD did not send out the profit tax return. So on the slide, you see there's 3 different scenarios. Typically, they will not send out the profit tax return after you have submitted the first profit tax return. So these conditions include if your company does not have any accessible profits, or if your business have not yet commenced, and of course, if your business have ceased but not yet recommenced. Yeah, so these are the conditions that IRD will not send out the profit tax return on specific date to your company. So apart from limited company, there are different businesses in the world as in Hong Kong as well. So that will include sole proprietorship and partnership. So do they need to file the profit tax return? Technically, no, because they are not company. For example, sole proprietorship, the owner does have unlimited personal liability, and also for partnership, those partners together that own the business have unlimited personal liability. So therefore, they actually do not fill in the profit tax return. They should fill in their report their earning on their own individual tax return. So therefore, they do not need to request or file a profit tax return. So that would leave only limited company, right? So limited liability, and they will receive the profit tax return. And after that, the audit report will still need to be prepared by a certified profit accountant in Hong Kong in order to file the profit tax together. Okay, so limited company are the prime entity that needs to file. So sometimes you do not receive profit tax return from the IRD, but that does not mean you should not be aware of it. Yeah, so that's a very common reason why the company do not receive the profit tax return. And I think a lot of them related to mailing issue, right? So for example, they lost their tax return, or they mailed to your previous registered address. Just, you know, sometimes the IRD does not have the latest address from the company, so they mail it to another address. And yeah. So what that means is, if you as the company have accessible profit and you have not received the profit tax return, the company should actually take a more proactive approach to request the IRD for either a duplicate profit tax return or issue a new profit tax return. Yes, but there are some common misconceptions as to whether you need to file the profit tax return or not. So one of them are if your company have no operation or they're dormant, or even your company is in a losing money status. Yeah. So actually, if the company have received the profit tax return, then the company must submit the profit tax return to the ROD within their time limit, even if there's no actual operation or there's making a loss. So it is the company responsibility to ensure that the profit tax return is filed to the ROD on time. Okay. So please don't have the idea that if it's a loss, then you can ignore the profit tax return sent by the ROD. Yeah. So make sure you find accountant and auditor to complete the audit and then file the profit. So when do you actually file the profit tax return? So the long filing time is 1 month after the date of issue. So I mentioned the company should typically receive on the 1st of April. That means it should be returned or filed on the 30th of April. But however, there's a caveat for that, right? So if the company have a tax representative, then the date of filing will be extended automatically. Yeah. So for example, if your company financial year end date is between April and November, then the profit tax return filing date will be the 2nd of May in 2024 in this case. Yeah. And if your financial year is 31st of December, then the company's tax filing deadline is the 15th of August 24. And finally, January and March, the profit tax return filing date is the 15th of November. Of course, there's one exception as well. So for those companies with year-end date on January up to March, if the company is making a loss, then the tax filing deadline will be further extended to 31st of January 2025. Okay, so remember these extended date is when the company already have a tax representative. So what if your company is newly incorporated? When you should file your first profit tax return? So as I mentioned before, the company will receive the profit tax return 18 months after the date of incorporation, and the company will have 3 months to file the profit tax return to the ROD. So total 21 months after the date of incorporation, the one that we highlighted here, 21. So as a basic example, let's say if your company have incorporated in January 2023, so 18 months after the date of incorporation is July 24. So this is approximate date that the company will receive the profit tax return, and the company will have 3 months to file the profit tax return to the ROD. So that would make it October 2024. So that the total timeline is 21 months. So how is the profit tax is calculated? So Hong Kong have a really unique tax system, right? So it is a territorial-based tax system. So what that means is only profit that is made or derived from Hong Kong is subject to the taxation. So what that means is if your operation is in Hong Kong, then it is subject to the Hong Kong profit tax. But if your main operation is outside of Hong Kong, then typically the company can apply for offshore exemption, hence not subject to Hong Kong profit tax. Okay. So what is subjected to profit tax? So as the name suggests, if the company have made net profit, that is subjected to the profit tax. And after the tax is paid by the company, any dividend issued afterward will no longer be taxed again to the shareholders, okay, if they're in Hong Kong. Okay, so that's one good thing about the tax system, meaning the tax is not double taxed. Also, advantage in Hong Kong is that there's no sales tax, unlike other countries, VAT or capital gain. So there's one advantage in Hong Kong taxes. So in terms of the tax rate, so for the company that we're mentioning today, the limited company. So the first 2 million Hong Kong dollars net profit is taxed at 8.25%, and any profit after 2 million is 16.5%. So from my research, this actually relatively low compared to the rest of the world. Of course, I got it included here for unlimited company. They are slightly lower than limited company at 7.5 for the first 2 million Hong Kong dollar profit and 15% for any profit afterwards. So how do you file your profit tax return? So in order to file the profit tax return to the IRD, there's 4 documents that were 3 or 4 documents depending on whether the company have offshore exemption, right? So first, the profit tax return that you receive from the IRD. Second, the audited financial statements after the company have been audited. So that have to be filed together with the profit tax return. And thirdly, tax computation. So typically the tax team will calculate the tax liability of the company and also submit that to the IRD for them to evaluate. And lastly, of course, if you do not have any operation in Hong Kong at all, then the offshore exemption application will be submitted together at that time. Okay. So of course, as I mentioned, the audit report needs to be submitted. So please ensure that you have arranged for your audit ahead of time, because typically audit will take some time, and please make sure you have incorporated that amount of time required for your arrangement. So here are step-by-step processes that you need to file the profit tax return. So of course, the first step is to gather all the required documents. So those documents were mentioned in the previous slide. So the four different documents. And then there's different methods, right? Typically for Sleek, we will help the company to file physically and directly to IRD. Okay. Of course, there's different methods as well. For example, you can file it directly online, or you can fax it. That's a possibility, or file it directly physically. So completing the profit tax return will include calculating the tax profit, any deduction allowance, and finally your tax, right? And then submitting those documents together with profit tax return directly to the IRD, and then lastly, the IRD will send out a final tax demand letter, typically up to 6 months after the submission. Okay, so please be aware here, Hong Kong run on a system where you need to pay the tax as well as the beneficial tax. So that's the year afterward. So your tax liability should slightly higher than what you expected because you're paying in advance. So of course, maintaining record is a very important step for being compliant. Okay, so what does that mean? What do those documents include? So invoice, sales invoice, expense invoice, any receipt, bank statement for any bank account that the company has, and of course any contract and agreement that was signed by the company and the bank, if it's a loan agreement, or your client, if there's any sales contract, and of course any expense contract with your supplier. Typically, these documents are required to be kept at least 7 years, because the 7 years are the time that the IRD can request and inquire on. But of course, if fraud is involved, that 7 years is actually extended. Okay, so please make sure that you or the company have sufficient documentation for any invoice and bank statement that the company has. So here's some strategy in terms of how to manage the liability. So first of all, so minimizing the tax liability includes having the right timing for revenue recognition. So for example, if you have signed a contract for work that is being done for next year, so any money that you receive now should not be recognized for this current year. So if you're already having a lot of revenue, then you don't want to recognize those income in the current financial year. If the work is carried out in the next financial, so you want to put it in the next financial. Deductible expenses. So any business related expenses can be deducted from the company's profit. So you want to maintain all the supporting documents for that. So it can be deducted from the company's profits. Also, you want to avoid any more aggressive tax avoidance techniques, right? So that will include, help not to violate any tax law in Hong Kong, and eventually, if that becomes too aggressive, then there may be some reputational risk to the company. And I think lastly, especially for small and medium enterprise, where the shareholders and director are the same people, then you want to balance the director's revenue and the dividend payout by the company in order to optimize the tax for the director and the shareholders. So what does that mean? Because everyone in Hong Kong have a basic personal allowance, which is 132,000, those are tax-free income. So of course you want to pay yourself at minimum 11,000 per month, right? Because that's tax-free. And any income afterward will be taxed under this bracket, right? So 2% for the first 50,000, then 6% for the next 50, 10%, 14%, and then finally 17%. So you want to have an amount that is the most optimal, because in company they are taxed at 8.25, right? So you want to utilize the 2% and 6% bracket. Apart from the 132,000 basic allowance, there's also other allowance in Hong Kong that you can use. Like for example, child allowance, dependent parents allowance, single parent, personal disability, disabled dependent allowance. So these are all allowance that is claimable by the director or the shareholder within. Of course, more deductions are available. For example, self-education, loan interest, and premium from your insurance, NPF. So these are all should be taken care into your optimization of tax. Lastly, so these are the 4 common tax mistakes. So of course, for a company, you want to make sure your records is accurate. So mainly because when the auditor is doing the audit, they will ask for supporting document in order to verify whether the transaction is accurate or not. So you want to keep them. Second, employees and contract. So you want to classify the employee correctly compared to contractor, because there's a different handling process for both of them. Thirdly, you don't want to ignore tax deadline, because if there's any tax deadline missed, there will be consequences in both financial penalty and prosecution. And lastly, I also mentioned this before, you want to avoid being too aggressive if your tax avoidance. Yeah. So of course, these are actually some of the more serious tax avoidance technique which you should not use, like falsifying contracts, claiming personal expenses and business expenses, hiding non-deductible expenses, and of course, incorrectly record income expenses. You don't want to. You want to avoid these practices. So of course, we talk about what is timeline. You should always file your profit tax return on time. But what if you can't, or there is maybe some practical reason why you cannot do that, right? So what are the consequences? So for the first boxes, like this is the consequences for late filing or non-filing. So of course, if the company have already filed a profit tax return in previous year, if you forget to file the profit tax return in this year, then the IRD will actually base the tax liability on previous year, and of course add on to a few percentage for inflation, and that will become the company's tax liability. So maybe sometimes that is good or sometimes it's bad for the company. So in the circumstances where the company have made significantly less profit than previous year, then you definitely do not want to miss that, because IRD will, and they will definitely do estimate their tax, and if you do not have the corresponding response to that, then that tax evaluation will become fine. Okay. If you ignore that, then there will be financial penalty, usually a fixed fee or potentially a percentage of the tax amount. And lastly, when it comes to the worst thing, then the company will be summoned to court in order for the court to, to challenge the reason why it is late filing, and potentially prosecution and more financial penalty for that, right? But what if you have filed your profit return on time, but you forgot to pay the tax on time? Okay, so of course, everything with the late payment will come with a penalty. So initially there will be 5% penalty, and after 6 months, if the penalty plus the tax amount is not paid, then a further 10% will be added towards the amount. And lastly, if that is not paid on time, then the IRD will take the company to court by legal action. So of course, you don't want to get to that stage for the company. So yeah, so that is the end of the webinar. So if anybody have any question, then please feel free to put it in either in the Q&A section or in the chat. Yeah, so I will be answering those questions. Please do not hesitate. So I guess there will be some common question regarding to offshore as well. So I think let me just talk about the offshore exemption. So what does that mean? Okay. So if it's offshore, that means there is no operation in Hong Kong, right? No head office, no actual operation, trading action, or any suppliers or any customer in Hong Kong. Typically, if the company is able to fulfill these few criteria, then application for offshore should always be smooth, right? But as I mentioned, these are just one of those factors. So if the company meet most of the factor, the company can still apply for offshore. It will depend on IRD's evaluation in order to determine whether the company can claim offshore or not. I think one last point to state is that the offshore status, it can apply to the whole company as a whole, or it can apply to certain transactions, right? So let's say if your company half is in Hong Kong and half in offshore, then only that half that's actually in Hong Kong is subject to Hong Kong profit tax. So if there's some operation in offshore, then I think it's still worth looking into applying the offshore exemption. Okay. So there's some other questions as well. So what I'll do is I'll read the question out and then I'll answer those questions. Right. So first, second question: my company operates in Hong Kong, but our revenue and expense come from different regions. So how will that affect your profit tax filing? Okay, so as I mentioned, if your operation is in Hong Kong, then typically your company will be subject to the Hong Kong profit tax. It doesn't matter your client is offshore. I think at this particular stage of the economy, a lot of e-commerce shops. So if you actually operate in Hong Kong, then it doesn't matter. Your customer or your supplier is not in Hong Kong. So if you operate in Hong Kong, then your company would typically be subject to Hong Kong profit tax. So third question: do I wait for the notice of assessment to pay the professional tax? Yes. So typically, if you submit the profit tax return on time, the IRD will evaluate the company's tax position Typically, that would take up to 4 to 6 months for the IRD to have a decision, and they will send out the tax demand letter for the final tax and the professional tax. Okay, so the company will not be required to pay the tax until the tax authority or the IRD have sent out the tax demand letter. Okay, that's mainly because the company would not know the final decision of the IRD, and the company wouldn't know the exact amount, even though the tax team would already have calculated that for the tax for the IRD as a reference. Okay. So moving on. So how to apply offshore claim? So what is the chances to be accepted, and how long will the company be in status for offshore claim? Okay, so for offshore claim, typically it is submitted together with the profit tax return, as I mentioned in the PowerPoint. Yeah. So what that means is, if you are a new company, then it is applied 21 months after the date of incorporation. And if your company have been ongoing, then the deadline is based on the tax year, on the financial year end. So I'll just go back to that slide to show you. Yeah. So here, December year end is the 15th of August. January to March year end is the 15th of November, and any other date is the May of 2nd of May. Yeah. So the offshore claim will be submitted together with the profit tax return. What is the chances to be accepted? Well, it really depends on how many factors that the company fulfilled. I think one of the major factor is the operation of the company is not located in Hong Kong. Yeah. Other factors also include the headquarters, whether there's any exposure in Hong Kong, supplier in Hong Kong, and customer, whether it's Hong Kong. If you're trading, so if there's any good coming into Hong Kong or going out from Hong Kong, so these are all factors. Yeah? Also, it doesn't really mean if you hit one of them, then your offshore claim will be rejected. Right? So it's just one of the factors to be considered by the IRD. So how long will the company be in status for? So let's say the IRD accepted the application for offshore. Typically, the IRD will not send out the profit tax return for 2 or 3 years unless the company have any onshore tax. Then the company should take the initiative to obtain the profit tax return. Okay, and after that initial 2 to 3 years, IRD will send out the profit tax return to the company again, and by that time the company should apply for the offshore again. Yeah. So please let me know if that answers all of your questions. If you don't, then you can put the question back into the Q&A section. So moving on. So our company experienced a period of loss last year. How does this affect this company's profit tax filing? Okay, so if your company have made a loss last year, then typically the IRD will not send out the profit tax return for the following year. But of course, there's always exception. If the IRD does send out the profit tax return in the following year, then your company will still need to file the profit tax return, whether or not the company have made a profit or a loss. Okay. So of course, if the company have made a loss in the previous year, then the trade loss can be carried over to offset the company's profit. Okay, I think that's one good thing on the Hong Kong tax is that those can be offset. Yeah. So let's say if the company have made the profit in the following year and the profit does not offset totally for the loss occurred in previous years, then that loss will continually carry forward until the company's profit is able to offset the financial losses for previous year. Let's move on. So In order to achieve offshore claim status, should the bank account of Hong Kong company be located somewhere outside of Hong Kong? Okay, of course, the bank account in Hong Kong is one of the factors that is considered by the IMD, but that is not the only factor or one of the main factors, right? So if having a Hong Kong account benefit the company, and compared to other country, then then definitely should have a bank account in Hong Kong. We also have, recent days, there's very popular for virtual bank account. For example, wallets or other, virtual bank account. These bank account is very convenient because they cover multiple country and can transfer money, from one currency to other currency very quickly. And if the company do not require a bank account located in Hong Kong, then those virtual bank account can be a really good option for the company. So let's move on for the next question. Our company have previously been fined for late tax payments. So how can we avoid this from happening again? What method can help the company to better manage tax payments? So I think there is two stages, right? So one is being late for filing the profit tax return. Second is being late for paying the tax, right? So let's address for paying the taxes. So of course, if you have received a tax demand letter, that means you have filed your profit tax return to the IRD already. So I think the company should always expect the IRD to send out the tax demand letter. So if the company have not received that after 4 months up to 6 months, then company should take an active approach to contact the IRD to see whether the tax demand letter have been sent out or not. And I think for in more digitized case, if the company have a tax account, you can actually see the profit tax demand letter in your e-tax account. And of course, that is also a good way to keep track of whether the IRD have sent out the tax letter or not. And once you understand whether the IRD have issued the tax demand letter, then it's up to the company to clear that all at once, or for some circumstances, IRD will suggest to pay in 2 installments. So make sure you pay the installment on time. Otherwise, the penalty will be based on the whole tax amount rather than by the installment amount. Okay. So that addresses the second situation. So for the first situation, where the company have been late filing the profit tax return, so I would also suggest to expect the company to receive the profit tax return on the 1st of April, unless the IRD have explicitly sent a letter out to the company saying that they will not send profit tax return out for next few years. Okay, so if you assume that the IRD will send out the profit tax return, then you should actively look out for them. Sometimes for company, your registered address is different from your business address. Then some of the service provider may not upload their document on time or will not notify you when they have received the profit tax return. Then then you should take the initiative to talk to your service provider. Okay, for Slick, we do have a really comprehensive mail room system where we upload the room the mail within 1 or 2 days of receiving it, and to notify the admin once there's any mail received. Okay, so of course that is also one of the critical factor in order to manage whether the company filed the profit tax return on time. So apart from that, as I mentioned, in order to file the profit tax return, the company needs to be audited before file that. Yeah. So it is always good to arrange the audit ahead of the time, because the company that fall into the D code and the N code, there's a lot of companies that fall into these filing dates as well. So you want to secure an audit slot or an audit schedule, so that your company is definitely getting the audit required before the deadline. Okay, so that is also one point that I would like to point out. So we still got 5 minutes, so I'll take another 2 questions. So these are the ones here. I'll answer them, and if there's any question afterward, then please feel free to email us. Okay, so the next question: what are the common deductible items that can help the company to reduce the tax liability in the profit tax filing? Okay, so of course, in Hong Kong, any business-related expense can be deducted from their profit, from their revenue or the profit, in order to arrive for the net profit. Yeah. So what are those business-related expenses? So if you have an office, then the rent is directly related to business, so those can typically deduct the expense. It's deductible expense. Any communication bills such as broadband, telephone, any other fixed, maybe some furniture that the company have purchased, then these are also related to business. I think more controversial expenses are like the entertainment expense, right? So if you had a meal with clients, or you pay for some cinema tickets for your client, are those deductible? But principally, if those are related to the business, so if you're taking your client out for good time, and it is purely for your client's sake, then yes, those can be regarded as the entertainment expense. Okay. As a very obvious example, like what is not business expense. So let's say if I have a daughter, and my daughter go to a private school, and the company paid for the tuition fee for my daughter. So obviously that is not an expense related to the business. Yeah. So hence that should not be included in the company expense. Of course, the company can pay the director for the tuition fee, right? That is fine, but that amount will not be regarded as as a tuition expense. That will become the salary for the director or for the employee. So that will be treated as the employee's salary. Okay, let's move on. Last question. So our business involves digital currency or cryptocurrency transaction. So I guess these are popular these days, like Bitcoins and Ethereum. So how does that affect your tax reporting? And how should we handle the recording and reporting of these transactions? So fundamentally, these are just the method of receiving payment from your client. So fundamentally, it does not affect how the profit tax return filing. So if you're billing your client 50,000 Hong Kong dollars, then that is still the revenue for the company, and that will still be taxed after the expenses. Okay. If your company invoice your client in digital currency, then that Bitcoin, for example, so that Bitcoin will be evaluated at the point of issuing the invoice. That will be converted to a fiat currency, so that it can be evaluate how much that invoice or that transaction is. Okay. So afterward, whether the company received the currency in what method, then that's not relevant in terms of calculating the net profit of the company. Okay. So of course, I think one major concern is that the difficulty of determine the crypto account or the crypto wallet actually does that belongs to the company. So the best thing to do is on some trading platform or some wallet, then your company registered to an account, and that can be easily proven the account belongs to the company. Yeah, so it's about time now. So I will not answer any further question. Of course, if there's any question on your side that I have not answered, please do not hesitate to reach out to my team or the Slick team. And I really hope that you definitely have a good and learn a few points for the profit tax return piece. Yep. And of course, lastly, I just want to say that we do have a community on Facebook that you can join if you have any question or, or, or any matter that you want clarity on. So it's called um, Business Question Answered for Entrepreneur and Startups Hong Kong. Okay, I think you can join it using this QR code. And it's called the Sleek HK community. Okay. So otherwise, I look forward to you joining into our community, and go ahead and fire any question that you have. And people in here in Sleek, we love answer questions. We love to help entrepreneurs. So please do not hesitate to ask any question or clarify any points that you have. Okay, I guess this is the time is up now. So I thank all of you for being very patient with me and look through and listen through the webinar. Yeah. So thank you all, and of course, definitely I hope to hear from you in the future. Thank you. Bye bye.